Hello, my name is David Miller. I'm speaking to you in early August, and I'm here to give you an update on Nexus Global Solutions portfolio and Nexus Global Dynamic. Well, it's been another good month for investors generally, and these portfolios in particular. Both have increased in value by just under 1%, bringing the year-to-date total for Dynamic to nearly 9% and for Solutions approaching 4.5%. These are good real returns over the rate of inflation. Both portfolios are well ahead of the position pre-pandemic. Dynamic, the all-equity portfolio, by approaching 14%, and Solutions, the more diversified portfolio, up by approaching 9%. It just shows you that patience is a virtue and that long-term investors are rewarded. And also, it's good to see that even investors who came in during the tough times of last year are also well ahead on their starting positions. So that's enough of the past. What's going on at the moment? Well, various things are happening, but some things haven't changed from last month, or in fact, over recent months. The global economy is growing at a reasonable rate. Although I have to say that the pace, which was pretty breakneck, is starting to slow a bit, but I think that's fine. A positive trend for us to join in with. Second thing is this virus, this pandemic. The infection rates are rising in various parts of the world. But again, let's look at what's happening. Vaccinations seem to be working in terms of reducing infection and certainly reducing hospitalizations. And we do see a difference between different parts of the world depending on how vaccination programs have been rolled out. And the final thing is inflation. That, if anything, is the cloud on an otherwise clear sky. Yes, as the world has reopened, there have been imbalances between supply and demand, and prices are rising in certain places. Whether this is temporary or permanent is yet to be resolved. Suffice to say that it's something that we're watching very carefully because it does matter. Not because inflation at a moderate level is in any way a bad thing, but more that it will have an effect on central bank policy. And we are assuming that for the foreseeable future, we will continue to have low interest rates. That's what matters to markets. But in many ways, the cost of money is what drives a return. And it's been low for a long period of time now. One more point about inflation, really as an aside, and nothing to do with these portfolios. But inflation is corrosive, even at a low level, which is what we've seen over the last 10 years or more. Cash is not a good investment. And if anything, a little bit of an uptick in inflation, more awareness that inflation is still there, really reinforces the importance of investing to earn a return, which is what we're doing with these two portfolios. So to the detail, what's been moving, what's driving the unit prices higher? Interestingly, it's not asset allocation, it's security selection. And the leaders last month are different to the month before. Last month it was US technology shares, still in the portfolios, still performing very well. But ahead of them this month, a whole range of things. Alstria, a German real estate company. Experian, which probably you know about, it deals with credit ratings for people. A couple of the fund managers that specialize in alternative investments, but are good companies in their own rights. And Segro, the UK property company that used to be called Slough Estates, renamed but hasn't changed what it does. It's heavily involved in warehouses and logistics. Absolutely the right place to be at the moment. So this is where the real added value has come. The dynamic, which is all equity, gets more of that than Solutions, which has investments in other areas, specifically fixed interest and alternatives. Good news last month is that all areas made a positive contribution. Long-dated British government stocks, gilts, added quite a good return to the overall portfolio return. And in alternatives, a range of hedge funds that we've invested in and infrastructure funds. Both made a significant contribution to the overall return. Diversification is really paying off at the moment. Geography, sector, and asset class all have a role to play in the current investment environment. And those are really the foundations of the portfolios, along with quality and liquidity. It's not that we can see the future with great accuracy, but as the future emerges, we are in a position, because we're investing in readily realizable, top quality investments, to change our mind. We can change our mind and change the portfolios. And that, in the longer term, is what adds up to making a really good return for investors. Compound growth over the long term is a very powerful driver of investment return. So that's it for this month. I can't say that there aren't still problems in the world, but we'll face up to those if we have to. For the moment, markets, investors, and these portfolios are positioned for further economic growth. And as the world emerges from the recession of last year, when everything was locked down, I think we're in a good position to benefit. I hope this has been useful, and I look forward to reporting to you again in a month's time. Thank you.